Welcome to Trading at Noon. I'm Christine Lee. There could be an executive change at office-sharing startup WeWork. The company, which already delayed its IPO, could replace or reduce the influence of embattled CEO Adam Neumann, who is a co-founder. Reuters correspondent Joshua Franklin broke the exclusive story and joins us now. So Josh, bring everyone up to speed. First of all, WeWork is a highly valued company that is private, looking to go public. Tell us about what they do and some of their investors.
Yeah, so WeWork was founded in 2010, and it basically has this pretty simple business concept. What they do is they take out long-term leases on office space, in major cities, New York, San Francisco, London, and then they rent out that space on a shorter-term basis to freelancers, to entrepreneurs, and in certain cases to larger companies, and try and pocket the difference between the short-term revenue that they earn and the longer-term liabilities that they're on the hook for. And they've really grown a lot since they were founded 9 years ago. As you mentioned, they in terms of the investors that they have, they've got Fidelity, which is a kind of blue chip U.S. investor here, invested kind of late stage, and then crucially, by far the biggest investor they have in their corner is Japanese tech conglomerate SoftBank, which has invested just over $10 billion in backing WeWork.
So at the beginning of the year, they had this incredibly high valuation at $47 billion, and now it's been significantly reduced to something like 10 to 15. How do you get from $47 billion to that low figure?
Yeah, no, it's been a really rocky year for them since that valuation figure came out in January. I mean, the company confirmed earlier this year that they plan to go public, and since then there's been a lot of negative headlines about the corporate governance of the business. Adam Neumann has a very firm grip on how that company is run, and a lot of investors have expressed skepticism about that. There were slightly confusing things about how his wife was going to be involved in succession planning for him if he were to die suddenly, which some people found was taking it a little bit too far for a public company. And then just fundamentally, with WeWork's business model, there are concerns. The company is losing a lot of money as it is right now as they invest in growth, $900 million loss in the first 6 months of the year. There are concerns about how that business model is going to weather a downturn. As I mentioned, you've got long-term liabilities and short-term revenues, and if those short-term revenues start to dry up, which could happen in a downturn, there are concerns how would they cover those long-term liabilities. And that's just something that's giving investors a lot of pause and making them think that a valuation of $47 billion just isn't even remotely on the table right now.
Incredible. You also mentioned CEO Adam Neumann. So you broke the story that there are talks of having him transition potentially out of that executive role. What can you tell me about that?
Yeah, I mean, I think it's been for Adam Neumann. I think it's been a real journey. I mean, he has been he's been on this unbelievable ride. Ascent basically for the last few years at WeWork, growing this business on his own back, raising money and charming a lot of venture capital investors and mutual fund investors. And this year has really been coming back down to earth for him. Obviously, when they first revealed their IPO filing, he thought that it wouldn't be a problem for him to go public with the corporate governance as they have it, and all these other issues that people have since raised. In the last few weeks, I think there has been a realization that changes do have to be made. SoftBank, we understand, is pushing for changes to Adam's role, potentially stepping down as CEO, moving to kind of a chairman position and bringing in a kind of more hands-on executive who's a little bit more focused on the day-to-day, or it's kind of another change that could happen. It remains to be seen kind of how amicable this can play out. We understand that Adam is engaging in the talks. We'll see kind of whether or not they can come to a mutual agreement, or if it comes down to a board vote, simple as 7 board members, majority wins.
Right, I understand that they would need his consent because he has a lot of control over the company. There's also a lot of questions about erratic decision making, drug use. He seems like a guy with high ambitions, which has attracted a lot of praise and notoriety.
Yeah, no, for sure. I mean, he is definitely a larger-than-life CEO. There was reporting last week about a kind of in-depth reporting by the Wall Street Journal about his a little bit on his lifestyle and his management techniques, and there was kind of mentions about drug use and alcohol as well in there, but in relating to the company's culture. So he definitely is, and he does see himself as kind of a real visionary and a charismatic leader of the company. And obviously, it's worked well enough as he's grown WeWork as a private company, but the question now is whether or not that is a suitable mix if it's going to become a publicly listed company. The interesting thing as well, obviously, Adam, given his he has superior voting class of shares, which does give him operational control of the business, and in theory he could fire all of the board if he chose to go down that route if they did kind of stand up to him. But the thinking that there would be very, very short-term decision in nature, because it would almost make the company, you would think, kind of un-IPOable to do a decision like that from a corporate governance standpoint. It would show a CEO who really does have unlimited power, who won't listen to dissenting voices.
Right, and that seems to be the focus here. They need to have an IPO. They need additional funds. What can you tell us about that?
Yeah, so as I mentioned, I mean, they're burning through a lot of cash. They lost $900 million in the first 6 months of the year. Last year, they burnt through around $2.3 billion. So they really, they've raised a lot of money, obviously, from private market investors, but they do need to raise more in order to kind of continue the growth that they've been on. They're looking to raise kind of at least $3 billion in the IPO, and contingent on the IPO, they're also planning to gain access to $6 billion in bank debt that they've agreed from about 9 Wall Street banks, but they need to complete the IPO in order to gain access to that. So they have kind of at least $9 billion riding on it that they really need to get done on the IPO.
Yeah, it sounds like a cash-losing business. And earlier this year, we saw Uber and Lyft IPO. They were also losing a lot of cash. So is this what's just happening in the IPO market? What can you say about these companies and coming onto the public markets these days?
Yeah, it was a question at the start of the year when everyone was kind of gearing up for all of these high-profile tech IPOs that were going to come. Is what sort of leeway public market investors were going to give these companies about all of the losses that they had. And we saw very early on with the likes of Uber and Lyft that investors will have a hard time stomaching loss-making companies with no clear path to profitability. I think that's one of the things that's really hurt Uber and Lyft, is that they went public without stating a clear timetable of when they expected that to be. And I think WeWork, in some senses, is getting that same kind of pushback. We've seen it, even recently there was Smile Direct Club, which went public about 10 days ago. Priced well in the IPO, but it's struggled in trading. We've got Peloton going public this week, the fitness bike company, which is another loss-making tech startup, which is going to be interesting to see kind of how that goes. But definitely public market investors do seem to have an eagerness to back high growth companies, because they want growth in their portfolio, but it's not a growth at all costs strategy. You have to show what the time frame is that you might be a profitable company.
What a wild ride. Thank you
sure.
for your insights, Josh.
Thanks.
All right, well, stocks are flat to higher to start this week. A report on manufacturing in the U.S. came in stronger than predicted. Also, U.S. and Chinese officials described the deputy-level trade talks last week as being constructive and productive. The Dow Industrials are up about 0.1%, led by McDonald's, Nike, and Procter & Gamble. The NASDAQ and S&P 500 are near break even. Stocks to watch include Dollar General. Broker JP Morgan raised its price target on the discount retailer. It cites management's increased confidence in the company's multi-year growth plan. Shares are climbing about 2%. JP Morgan upped its target to $184 from $173. Also, Lululemon. Broker Piper Jaffray started coverage with an overweight rating. It likes the growing opportunities for the athleisure wear firm in menswear and its better than expected sales in China. The stock is adding nearly 3%. And Overstock.com, the company cut its 2019 adjusted profit forecast for its retail business, citing costs from tariffs on Chinese imports. Its CFO also resigned following the resignation of CEO Patrick Byrne in August after he revealed his involvement in an FBI probe. The company did name its interim CEO, Jonathan Johnson, as permanent CEO. Shares are sinking 16%. That wraps up trading at noon. You can watch more videos at Reuters.com. I'm Christine Lee. This is Reuters.